Good afternoon. This is Ken Long from Tortoise Capital on July 13th, 2015 at the live trading workshop in Raleigh. And I want to show three different trades in Lily and talk about some of the ideas behind them. This was today's story. So LLY, Lily, it's been great. Strong stock in the strongest sector. Big gap up today in the market. And in Lily, we put a half a frog box bracket on the open, so half a frog box north or south. The move up happens, so we get in at the green arrow, trail that with a frog box, exit around an hour later for a little over an hour. Next trade up, it goes into the sideways quiet channel. We get the Z3 pinch right here, so this is less than a frog box. The breakout comes to the downside, so we're in here. We're using the Bollinger Band mean as the trailing stop. Gets down around 88.90, and much to the surprise of the crowd, no, we go ahead and get out here, and this is a couple R on that position. The next trade, the entry looks like this. So this is at the bottom of the Lily trade, and we're near the low of the day. Excuse me. And this is that pinch box, so it's about 0.7 of a frog box. And I saw a 1, 2, 3 entry in here, and the price has entered the river. I'm going to stop and reverse if it falls out of that box anyway, so rather than wait for the full pinch box, I go ahead and buy it here at the green dot when the RLCO happens. I look up at the confluence of the VWAP and the RL270 as my reasonable target. I draw an extension of a regression line through the VWAP and suppose that the price by the end of the day is going to be around 89.30. I draw a regression line through this turning movement here and suggest to me that this would be the rational expectations line if this thing were to grow directly to my projected target. The rational stop line would be to take a line from the swing low and then move it all the way up. So this is approximately what that should do. So if 89.30 is the end of the day price, I'm really only aiming for the far side of the river, and therefore that still makes this a 2-to-1 trade, and I still like it. Later on during that day, through inattention, I let this thing grow to a 1R in hand and let it fall all the way back to just above my entry point, and I felt stupid, but I forgave myself and stayed with it, and it takes off again, and I like this little motion. It looks like a dragon coming out of the river after a pinch, and so we buy the second position, comes in around 89. And now that I've got my rational line of expectations still working, this is the rational price line that's still working. So we've got two positions in here, and I'm resolved to do a better job this time. After this, this is a zoom in a little bit. Here was the first entry. Here's the second entry. The second time, it comes up almost to that rational gain around 89.30 and starts pulling back. I decide this time to do better and take the exit at 89.14 while it's still above this rational gain line, and while I was still fairly close to the 89.30 projected line of value. The decaying line here, the VWAP towards 89.31, is still on target, so I still don't think that's a bad estimate of the final resting place. Now we're only about 90 minutes out. But I want to sell north of the rational expectations line here. There's still some promise in it. The Bollinger Bands are pinching, the 270 is rolling up, everything else is pointing up. But at this point, I wanted to cash a trade that had two positions in the money. And really, because I entered the second position before I had a 2 full R in hand, I was sensitive to the money management considerations on this trade. And then later this afternoon, we're still working here. It's still along the it's below the rational expectations line, so my exit was here, and now I feel pretty good about that after it has pulled back. It's still above the first entry, but the second entry would have been below. We'd no longer be in the money. So I feel like that was a good profit preservation move. The question still remains whether or not it can get to 89.32, but now that's academic. I'd rather bank the practical gains and then just see what happens with this technique. So I don't know what to call this other than just triangulation and projection. But this is how I like to manage, especially on quiet days where it's not immediately obvious what's winning or what's working. So that's a day in the life of Lily. We managed to come out of that thing pretty good, and that paid our tuition, or that paid our salary for working and learning in the chat room today. So it's Ken Long from Tortoise Capital. Keep your risk measured and your powder dry, and go Lily. Come on, 89.32. Let's see what you got.